Read this.
Karen is a sole trader who operates a service business called Hot Bubbles. From her own home, it is a laundry service in Townpete. Each day, Karen spends the morning collecting laundry from customer homes. Karen then washes, dries, and irons the laundry and then delivers it back to customers' homes in the evening. She owns 2 washing machines, 2 drying machines, and 1 iron. Each batch of wasting takes approximately 2 hours to wash, dry, and iron. Karen has completed some market research about which method of laundry households use in town. There are 60,000 households in Townpete. Karen has 300 households that uses HP's laundry service. Karen would like to employ someone to do collections and deliveries. Karen has always relied upon customer recommendations to promote HP. However, that has not been able to gain any new customers, and she thinks it is a time for new promotion methods to be used. She would like to target the wholesale laundry market. Table 1.1 shows some data about the local auto market. A. Define a term service.
So when we talk about service, service is an intangible or the intangible product that a business is willing to sell to customers, an intangible product that customers have to pay for.
Yeah.
So they are offered to customers for payment.
Mm-hmm.
I think it's clear.
Correctly, to explain the term sole trader.
Sole trader is a business that is owned and controlled by an individual who takes the risk of setting it up.
Mm-hmm. B. Refer to figure 1.1 and any other relevant information. Calculate HP's share of the laundry service market.
So for the laundry service, we have 20%, right?
Mm-hmm.
So 20% of 60,000, that would be the total market size. 20% of 60,000, that gives us 12,000.
Mm-hmm.
But based on what we have here, the information says Karen has 300 households that use HB laundry service. So that means 300, that's the current share of the market, which is 300 divided by the total market size, which is 12,000 multiplied by 100. So we have 300 over 12,000 multiplied by 100. So it gives us 2.5%.
Okay. Analyze 2 factors which could affect the scale of HP.
So when we talk about the factors that could affect the scale of HP, we're talking about factors that could stop the supply of HB. So we are talking about the factors of production, which is land, labor, capital, and enterprise. So how does each factor affect the supply of HB? So we'll start with the first one, which is land or capital. So when we talk about capital, we're talking about the quality and the quantity of capital. And what are the capital here? We're talking about the equipment used by Karen, right? The equipment used by Karen. So if the equipment like the iron, the washing machines are fine, it will bring out good job. And that means Karen will be able to supply or will be able to get more customers and attend to a lot of customers or service more customers. Do you understand? That's the first point. The quantity is about how many does it have? If it has just one, like if she has just one iron, that means it won't be able to work as much as possible. So that's the quantity and quality of capital. Then go to labor, the quantity and quality of labor also. So Karen is trying to employ an individual to help, right? So why is Karen using an individual? So that the job can be done faster and more efficient. Yes or no? So that is the quantity. So the kind of person Karen is bringing in must be an expert too. So it's not just getting the figure, also getting the work done as the best possible, in the best possible way. So that means that's the quality. Being efficient is the quality. Quantity is the numbers of workers that you're able to bring into the company. Then the third point is enterprise. So the ability and the willingness of Karen to be able to exploit or to be able to explore any business opportunities available. Because there are going to be business opportunities. Maybe Karen might think of finding other supply or customers, but this will take a lot of money to get done. So the risk involved, if Karen is willing to take the risk, then that is what we call business opportunity. You get it? And the last one is the land, the quantity and the quality of natural resources available for Karen. So all these factors are important. They are important because they can make or mar Karen's or HB's supply or scale. Then we go to Yes, I'm with you.
Explain one appropriate method of procurement for Karen to find a new employee to do collections and deliveries.
So she could use, Karen could use social media.
Mm,
This could reach large numbers of audience and it could be targeted.
sure.
So we go on to D.
Evaluate the appropriate promotion methods for HP to target the hotel laundry market.
So it could use personal selling.
Mhm.
So our personal selling, yeah, I wrote. This method is cost effective. It's cost effective because it means that you have to go check individuals or businesses yourself. That is personal selling. So yeah, I wrote. Karen could visit each hotel that doesn't have their own laundry service to explain to them the advantages of his own service.
Mm,
Do you understand? That's what we call personal selling. Then it can also use direct marketing. For direct marketing, that means you are selling details of your business to each potential customers.
yeah.
And I think I mentioned one more point. Yeah, promotional pricing.
Mhm.
Karen can also use discounting, reduce price
Yeah.
for its services, and that can also attract customers.
Yeah.
It can also use local advertising. So
Mhm.
you can use the local newspapers or the local radio stations to advertise your products. It reaches a lot of people.
There. Lakeland Oysters. Lakeland Oysters is a private limited company in Country G that was started by the Dar family in 2010. LO farms oysters in a lake that is owned by the business. Oysters are a type of shellfish. The business employs 6 people from the local town. LO has 2 markets for its oysters. LO believes that corporate social responsibility and its fiscal bottom line are important. There has been a recent new article on the internet about oyster farming. The directors of LO would like to expand the business by purchasing a second location. The business has 2 options. Define the term market.
So when I talk about market, what is a market? A market is a place where goods and services are exchanged for money.
Yeah, sure.
Okay.
So
So-
to extend the term profit margin.
So we talk about gross profit margin. Yeah. So for gross profit margin, the formula is gross profit divided by sales multiplied by 100.
Perfect. The effect of table 2.1 calculate the profit made from selling oysters in 2020.
We'll go back to the table. In 2020, right?
Mhm.
So we have let me go back to the question. Okay, yeah. We have for the profit margin, the profit made for the industrial, we have 15%, right?
Yeah.
So that means 50%. What is the formula for gross profit is gross profit margin is gross profit over sales multiplied by 100, right?
Yes.
Here we have our profit margin, we have our revenue, we don't know the profit. So we need the profit, yes or no?
Yeah.
So to get the profit to be 15 over 100,
Yeah.
15 over 100 equals to 100,000, or gross profit over 100,000.
Yeah.
15 divided by 100 is 0.15. So 0.15 multiplied by 100 gives us our gross profit,
There.
which is 15,000.
Mm-hmm.
For the consumer, we have 25%. 25% is the same as 2.5. So 2.5 multiplied by 150,000 gives us the profit for consumer, which is 37,000. So the total profit is profit for industrial markets and consumer markets, which is 37,000 plus 15,000, 37,500 plus 15,000, which is 52,500. That's the total profit made.
Analyze why 2 of the elements of the triple bottom line are important to LO. Explain 2 possible reasons why the profit margin for the consumer market is higher than the profit margin for the industrial market.
Let me go back down there. Okay, here they said we are in B Roman figure 2, right?
Yeah.
They said explain 2 possible reasons why the profit margin for the consumer market is higher than the profit margin for the industrial market. The profit margin for the consumer market might be higher because customers are willing to pay higher prices for the product.
Okay.
Do you get the point I'm making
Yes,
here?
yes.
So they are willing to pay higher prices for the product. So that might increase the profit margin for industrial, right?
Yeah.
Okay. No, for consumer, it's higher. The consumer margin is higher than industrial. Yes or no?
Yes, for the consumer is higher than the profit. Okay.
Yeah. So that's the first reason is that for consumer, they are willing to pay any amount for that product.
Okay.
That's why. Then for the industrial market, it's incurring more cost. So if it's incurring more cost, then it's going to have lower profit margin.
Yeah.
Or probably consumers are not willing to pay so much in the industrial market.
Yeah.
For consumer market, it might be because consumers are willing to pay higher prices.
Mhm.
And also it might be that in the consumer market, the cost of production is less. For industrial market, it might mean that consumers are not willing to pay higher prices, or it might mean that it's incurring more cost of production. Now go to
Analyze one two of the elements of the triple bottom line are important to LO.
So we're talking about TBL. TBL means you are trying to figure out the performance of your business based on social, financial, and environmental analysis. So here I would triple bottom line aims to measure the financial, social, and environmental performance of a company. So you want to measure it based on the financial, you want to measure it based on, when we talk about financial, we're talking about economic also. Or you want to measure it based on the social, or you want to measure it based on environmental. So we start with financial. So for financial, I wrote that family will require profit to be made as shareholders of LO owners. LO as the owner of LO. Here they said the LO here. Let's go back here, please. They said, oh, LO is a private limited company. So that means the owners would want to make profit, yes or no? So we need to base the performance of LO on financial terms.
Okay.
Do you get it? So we base it on financial terms because we want to make more profits so that we can share to shareholders. We can distribute to shareholders. That is financial. So we base it on that. But if LO is not making profit, that means shareholders' dividends will be less. That means LO is not performing well financially.
Yeah.
Okay. Then we go to another point there I made is still financial, retained profits. So LO wants to invest on LO wants to finance a new farm based on the article. So if it needs to finance a new farm, it has to think about retained profits, not sharing of profit. So that means LO still need to keep some money so that it can use it to finance the new farm. So these are still financial situations or financial measurements. Then we go to social. Here they said LO provides employment for 6 local workers. Yes or no?
Yes.
So that means LO is socially responsible. That's the first point. The second point is that LO pays taxes to the local government, which also means that the local government can use that tax, the revenue from tax, to develop the area. That is social. Then we go to environmental, right? Though they said we should mention two, but let me just talk about environmental. So for environmental, LO should ensure that it's not polluting the environment.
Yeah, sure.
So that's about that. Then we'll go to D, yes.
Refer to table 2.2 and any other relevant information. Recommend which location LO should choose to support recommendation.
So before we go into the location here, we have location A and location B. First, we have to understand LO situation. And what are the analysis about LO situation? Based on what I read, based on what you read and what I know, the first thing that is LO is a private limited company. So that means LO is having less finance. It's not going to have much capital like a public limited company. That's the first point. So the new location has to be a second place, not that LO is leaving its first location for the new location. So it's just going to have a new branch. That is what the location is talking about. The third point is that I said based on I said LO is a private limited company. The new location should be a second location. So based on these two things, we have to check. These are the situation of LO. LO is a private limited company, which means it has limited finance. LO is not changing is not changing totally from the location it is right now to a new location. LO is using that second location, is using that location as a second location.
Sure.
So that means LO should start thinking about how to minimize cost. So based on this location A and B, for me, I think I said LO should choose location A because one, location A it has been used already for an oyster farm. So that means it needs less finance to purchase a new farm. So the farm already is set to be an oyster farm. So that means you don't have to spend like on location B, that is a fishing lake. You have to start structuring it to an oyster farm.
Yeah.
So that's the first point, because LO doesn't have so much money. So taking location A based on the current situation, current use is better because it's cost effective. The second point is about lower startup cost. LO would not, the startup cost here is 20,000.
Okay.
And for location B, it is 100,000, which is too much. LO doesn't have that financial capability. The third point is lower operating cost. For operating cost, here it is $150,000 per year. And for location B, it is $200,000 per year, which is location A is still suitable there. Clear.
Okay.
However, the distance is a problem. The distance from location, the location LO is, the distance to location A is 100 kilometers, and to location B is 5 kilometers. So transportational cost might be an issue in transporting those oyster fish or whatever it needs to transport. So LO might incur more cost using location A than location B.
Yeah.
I think it's clear. So we've talked about the advantages of using location A because of cost effectiveness in terms of the startup, in terms of the startup, in terms of the purchasing price, in terms of the startup cost, in terms of the operation cost. But the only problem about location A is the distance, which is transportational cost.
Okay.
Any questions about that?
No.
That ends the